falling behind. So I expect this to be, this can play out as an SMT, or it can play as a late six sister. And I think it's going to be a late sister. Unless we get a strong displacement down. This is this is a six sister concept, which means that since ES and YF is NQ's sisters basically are going to the target, NQ will not want to be left behind and it will eventually catch up with them, especially that NQ is faster than both of them combined. But if we get displacement down, that's where things start to change, all right? Still waiting for some people to join, by the way. We still haven't started. So you can see we hit one standard deviation. 2 is around here. 2 has nothing important. Oh, 2 lines up exactly with yesterday's, I guess. Yesterday's New York AM high, which is pretty algorithmically important level, right? Because if standard deviations line up with the previous high, or in our case, previous session high, and a high, previous high, this standard deviation is important. Okay, this can act as like a draw on liquidity. Doesn't have to take it today, but if we break through this SMT, we can eventually come back up and potentially look for a short position. Okay. Yes. All right. So that's what I wanted to show. So far. Hey Vodka. Hey Banana. Hey Jimmy. Hey SS Trades. And anybody else finds. So yeah. Let's give it a few seconds just to confirm whether this is going to be SMT or not. Okay. Then we can abolish this whole idea and go into a single chart. We have a reset code which ends at 3 p.m. Make sure you use it, okay, guys? Reset code here. Can reset any account. It's valid until 3 p.m. So what I wanted to show today is, all right, just before I start, I want this high to be taken out so I can close these 3 charts. Otherwise, we're gonna have to keep them on for a potential reversal. SMT and SMTs are called smart money tools or smart money techniques. It just shows you that these 3 should go in synonym, okay? In congruence with one another. So thank you. All right, fine. Thank you. So, but let me explain the point anyway. SMTs for those who don't know is when we have NQ, ES, YM. All 3 of them should move together in the same direction, as you can see right now. This here is a sign of healthy market, okay? When they go together. However, when you see one of them doesn't take the high, for example, NQ didn't take this high, but ES and YM did, this shows that smart money are tipping their toes or showing us hints that, okay, this might be the highest point of the day. Not necessarily of the day, but this could be a sign of reversal, a very early sign of reversal, okay? So this is where you can start looking for your entries. Doesn't mean you go take a short right away. Just means you have to look for your entries. But this has been abolished. We have no SMTs, so now we can close all 3 and focus on NQ. So with this happening, I can assume that we may come back to this level right here. Okay? More specifically, this level. But let's have a look. But the market will not do anything. Will not do anything until we're in a bank crunch, right? But notice something here. We spent a lot of time here. Look, we spent almost half an hour in this area, like going down, up, down, up, down, up. We just higher. I think everybody in the world knows that we want to take out at least this high, right? Everybody can see that this is a bit of strength. Even retails. But we're not taking out this high yet. Why? Because we are not in time efficient place where the market can or should be able to deliver price, right? So when did we take out this high? Pay attention. 1310, exactly within the macro. As soon as the macro started, so this is when the candle closed, this candle opened. Within this period, market started spooling back. On the 5 minute, doesn't look too much of a big deal, but like on the 1 minute, it was just chilling, and then the market started to go in a single straight line ever since the macro. Okay? That's a healthy market. If the macro is another thing, you guys should know. If the macro does what it's supposed to do, and that is hunt liquidity or stop losses or fill imbalances, if it's doing any of these things, that means it's tradable. Okay, you can continue trading. But if it's not doing anything during this macro, it's just chilling again, continuing this kind of scenario. Then you close, you go up to the left bottom, up to the left side of your chart, and there's this small red button, right, with a little X in it. You just right click that, and that's it. Okay, so here's our target, guys. If you're longing, this will be. I didn't see my opportunity to go long, but I know that the drawn for me right now is this. Why is it this? And go back and say that market standard deviations. How do you draw standard deviations? By the way, I'm gonna go over the strip setups in a second. But this slow was manipulated by this slow, and this high is in between them, right? So we have a low, higher high, lower low, higher high, right? Or we just draw a vertical line here, and the highest candle that the swing high in between these two green orange lines is where you anchor your standard deviations. Right? And we get one standard deviation right here. We came to it. We didn't have immediate. We came to it. We closed above it. Okay, so that means we can continue probably to go to 2. But if it shows immediate standard projection here, then we'll come back to equilibrium of the ring. Okay, we did. Right now, we probably should be focused around 1.5 standard deviations. 1.5 standard deviations is also London high, which has been swept, which is nice. This is how accurate these standard deviations. 1.5 standard deviation exactly London high. 2 standard deviation is exactly previous AFI. Okay. So, all right, now we're going to drop to the lower time frames and see what's going on. But what am I waiting for? Luke, why are you going so slow? I'm going slow because I'm waiting for 13:30. Okay? 1:30 p.m. Why? Because that's when the algorithm will start spooling back on. Not spooling. During macros, it starts spooling, but during 1:30, it is when the lunchtime is actually finished. Now, most people think lunchtime is 1 hour from 12 to 1. It's actually a 90-minute lunchtime. The algorithm takes into account a whole 90-minute lunchtime. So 12 o'clock to 1:30. So right now we're still in lunchtime. Now, of course, you can go ahead and use your cycles. You can draw your 90-minute cycles, take the highs, the lows, and we can target that. But I am leaning towards more of an upside, unless we get a chosh. Where would we expect a chosh? We have a high, high, lower low, potentially, with this swing low becoming our chosh. So if we're gonna go for a short, that's the earliest we can go short. All right. So now we just wait, and we have to wait at least 10 minutes. I'm not going to take a trade until we get at least 10 minutes. After at least 10 minutes. And I wanted to show you guys the automation, so we'll do that probably near the end. Also, yeah. Participations came right now. Are any of you in a trade right now?
I'm not.
Yeah, sure. You can come here and you can check. We have 0, 1, 1, minus 1, 1, minus 2, 2.5, 4, minus 1.50. Just take a screenshot. I'll show you the lot of settings. Take a screenshot of this as well. Even comment in the video. All right, standard deviations is the secret source of all trading. I never take a trade without standard deviations. Right now, for my side. And this is for me. Just reminding myself that my eyes should be up. Okay? And is this all-time high as well? Let's have a look. So let's break down from the weekly down all the way down, right? It's not, we usually don't do this, but I want to show you guys how you can handle the bias. So we want to see where the weekly candle wants to expand. Well, obviously there's nothing on the left, so we can know that it's going up. Okay, there's nothing we can work with around here. What can we take from this weekly candle or from this weekly chart? Is there something we can use for our advantage? Yes, of course, we have an order block here, we have an FVG, we have a breaker, low, low and low, high and high. This high screen candle is your breaker, you can extend it over time, but we're very far away from that, right? So what do? You have a low, low, and the swing high, right? If Fibonacci, we'll place it from here to this high, and you'll get one standard deviation right here. So if the market decides to continue going up, this is our longer term target. This is the only thing we can do at high time frames. Okay? There's no bias. There's no such thing as bias when you're at all time highs. Right? There's only standard deviations. You can only project once the market is likely to do. So right now, this level here, 20,000, 20K, 302 is a level I'm going to be paying attention to for this week, next week, until it gets there. Okay? That's something I'll have my eye on. So that's the maximum thing we can withdraw from the weekly candle. So let's go on the daily. And the daily looks like it wants to expand to previous day high, which is already our buy side. But again, this is how you dissect the market. Okay? So we have again low, lower, low, higher, high. So we have a breaker right here. Use two candles to see breakup. If I take my Fibonacci and put it here, we probably get a similar answer. Well, we did it. We went past 1 standard deviation. Right? That's a good sign. Why? Because if it goes above 1 standard deviation, that means we can go to 1.5 and then consecutively. Right? But again, we are not there. We're way beyond that right now. So what is there that may hinder our progress to our weekly target? And that is, you see this wick? Most of you are familiar with FVGs. This is FVG, right? This is a bearish FVG, this is a bullish FVG. Nice. Well, what do you know? This wick, big wicks are imbalances themselves. Take it from the high to the wick's end, split it into half, and the midpoint of this wick is just acts exactly like an imbalance. Okay, so while most people are trying to target this high, the algorithm will most likely to reject from the midpoint. Okay, so we went above it. We didn't close yet. So if we do get a close in 3 hours above this midpoint of this wick, more likely than not, that Monday we're gonna come back and take out this high. If we didn't take out today already, okay? Suppose we didn't take out today. If we close above the midpoint of this, hold on, can you guys still hear me? You guys hear me? And you guys hear me?
Yeah,
All right.
we can hear you clearly.
All right, it just looked like my internet went off. All right, so this thing here is very important for me. Look, you see, we went above it, we wicked above it, and now we're slowly going back down, right? Here is a very important level. And you can go and label that daily C. So consequent encroachment. Or if you don't want to be fancy, you can just say daily 50% wick. Okay. Now this candle went up somewhere before it started going down. Where do you think it went up to? It didn't go anywhere random. If I take this wick, split it into 4 quadrants, where do you think it stopped, guys? Is that not algorithmic? We're doing this live, right? There's nothing, we're not checking something in the back, or we're checking in the history, or something that happened 10 months ago. We're doing this live. The algorithm pressed up here. I just told you, where did this wick go up? I didn't know where it's going up. It just did it right now. It went up and now it went down. It didn't go to a random place. The algorithm does never. Well, the algorithm will never go to a random place. Okay, every single move in the market is algorithmically controlled. Nothing random. Okay, this here is literally the 75% of this wick. Okay, and now we rejected from that, and now we're coming back here and probably close around the 50 or reject from here or hold above it and continue back up. Okay, so this big wicks is heaven's paradise for high frequency traders. Okay, and high frequency, and the algorithm is built for these high frequency traders with deep pockets to make money. Okay, it's not made for you. It makes these big wicks so the high frequency traders can come back here. They can go short here, come back to midpoint. They can long here back to 75, then back down to 25%, then back to 50%, and they'll keep doing this until they squeeze and milk out every single dollar that is in this area. Okay, until retail say, okay, I'm not gonna trade anymore, and then they will go back to this high or then start reversing. Okay? That is exactly how the market works on any single time frame, every single day, every single session, every single hour. Okay? So now that we have our levels from the daily, and you see, you can drop on the 1 hour, but honestly, I don't care about the 1 hour much. I'm gonna go back to the 5 minutes. Our sessions on, and you can see how they're playing it. Now, if I go on the 15-second, you're gonna see something funny. You see, they bring the price up from 0%. Here. They go up, they long to here, they short down, they can bring it back up here, they go long, they short it back to this level, they pump it up to this level, they bring it back to this level, they go back up, they fill this time, so they bring it back to this level, they commit more orders, and then eventually probably they come back to this level or continue going back. Okay? That's what you do. You can scalp this. Now we have beautiful 3 levels. You can scalp. You can go short right here. You can go long right here. You can go short right multiple times. Multiple times. You do not have to hold the whole move. You can just go short here and scalp it for like up to here. Okay? Look, you would have 0 drawdown. And now see, came back here. Now it's probably going to come back to this level, play around it, and then continue going down. Now I think it's going to keep doing that until 1330. Okay. At 1330, the algorithm will be like, okay, guys, enough. Let's get out. You had your chance. I personally think that they didn't have enough chance. They can still play these levels much, much more. And look at this, guys. Look at this. I'm on the 15-second chart, and these orange lines are on the daily time frame at the 24-hour time frame. They're based on that, but the 15-second is respecting it to the tick, to the upsplit tick, because the markets are fractal. Anything that happens in any time frame is relative to the other. Okay. And what did I say, guys? You come back straight to this level, then turn up the sessions, straight to this level and reject. I told you guys, come back here and just short it up to here. Right? Am I a magician? Did I code the market? No, I didn't. It's just ICT taught us that the market does these things. Okay. It has to do these things. It has to do these things, and it's automatic. And if something's automatic, then there is a set of rules that have to be followed every single time. Okay? And that's where we come in. So there you go, guys. If you took this short, well done. Beautiful, beautiful price today. Okay. We still have 35 seconds left. And look. Don't pressure. Look at the tick. Yeah. If I go on the 5 minute, I go on the 1 minute, and I remove all these lines, this is how the market looks like. It went up here and then rejected, came back up here, and then rejected, came back up here and rejected. It didn't even take out the side, you know? Yeah, like, what is going on here? You're probably going to be long, you're going to be short, you're going to go long. You're like, oh, damn, what am I going to do? Well, It's the market is delivering price for these deep pockets using specific levels, and these levels are as follows, for as I showed you guys. Okay, it's one of them. But now I want to show you where this wick went up to. Where do you think this wick stopped? This 1 minute wick. What do you think it will stop at? Let's have a look. Oh, we have a big wick. What's a big wick? Oh, big wicks are like an FEG, like an imbalance. Here, the lines, and unfortunately, it didn't even come back to midpoint. Okay, it started reversing. When it does this, when it couldn't even come back to the midpoint, it shows you how bearish it is. And that's why you had 1, 2, 3, 4, 5 consecutive red candles. Oh, it's okay. So the market's finally open. Well, when I say open, I mean lunchtime is open. I mean PM sessions open. Okay? So here you have your supply and demand zones. Supply and demand zones. You have your support and resistance. If you're that type of trader, you can trade that. Do you have to trade that? No, you don't. No, you absolutely do not have to trade that. What do you have to do? Well, you can wait for, we have a super premium session high. We wait for a chosh, and then for the FEG, and then we can enter going for short. Okay? That's the only confirmation that the market tells us that it wants to go down, right? But right now, it's just showing it wants to go up. Okay? And especially that we don't have any SMTs. I still have my eyes on that level. This level. Brother, why you have two or more Fibonacci configurations? Bruh. What do you mean? I have these. Oh, these are different things. One is OTE, optimal trading entry, one is standard deviation, one is sessions, one is weekly, monthly, week, daily. There is previous, blah, blah, blah. There is fancy stuff like this. But if you're asking why I have them, I don't use them. Okay, you don't have to use them. Now, we're approaching our drawn. I'm trying to delete that. So that's where I want to go. Okay. So now, if I can go on the 15 second, for example, let's see if the automation to trade market. I can drop on the 15 seconds, right? I have my bias. And if it goes against me, I'm fine. I set my bias and I like this trade. It's showing me that it wants to go one direction. So I'm not saying, oh, it's 50-50. If he does this, I'm going to go long. If he does this, I'm going to go short. No. I'm looking right now for longs. Okay? So I can find myself an opportunity trading opportunity. How can that be? For example, we have this FEG right here. We have this bearish FEG right here. This whole area here intersecting is called a balanced band structure. Not both of them. Specifically this area, for this balanced band, there's two BPRs. This one and this with this area for this area. You can see how it's respecting it to the thing, right? What did I do? I drawn the FEG, normally as we did. Send it out. There should be an FEG here. But there isn't. So this is not really any BPR. This is a BPR. Now, if the BPR is good, we should expect that the price should not come back below the midpoint of this BPR. Okay, so you can have your stop loss even below this orange line. So what we can do is, I mean, we missed the opportunity kind of, but we could have took along here. Or I can try something dangerous and use the midpoint of this wick as a support. So I can be going long here. Did I give that offer it? Yeah, it offered it here. On the text. So it's not giving us a configuration yet, so let's wait for it to give us a setup. Right here, there's a volume imbalance. I expect the price to come back to it, at least maybe giving us our entry. Oh, there's a difference in price, bro. And this sucks. Look at the price. They're two different contracts. All right, look, on here we have nothing. We only have this effusion. I was gonna go long here on that contract, but we have an order block here. That sucks. I hate trading in these conditions, man. Hey, this is my stuff. Right, I'm gonna fresh one. Now I have to figure out where the target is, you know? Why is my thing lagging? Go in with micros if you're taking this trade. Look, 2 standard deviations on this contract is not valid. On the other one it is. So I think I might just take a paper trade on the new contract. I can't trade it. 687. Alright. I really just sucks. Where's our BPR, bro? Oh, we don't know. That sucks. Almost 1-1. I think that's enough. Technically, you can place it around here. But I don't know. This contract differences, I'm gonna give it a little bit of space. Because I'm not comfortable with that. Look at this. Look at the price. It's 670 here. It's 931 here. This one's already running towards its target. We say we are looking at London super original finding with the church we're looking for, but it's at the end of London session going. How would you rate the self this week? The indicator will not give you an alert properly, if that's the case. But you can still take it. You can still take it. I know exactly what you mean, and you can still take it. Hold on, let me show you an example. So we want to go long, right here. Just 1 minute. So you were talking about, for example, like this, right? You got a chosh here, but it gave it here, gave it new again. This is still valid. You can still take it. Why can you still take it? Because the structure that is broken is in the London. It's a London structure, right? I mean, the chosh that happened was while here. It happened on the next 2-3 candles, about 3-4 candles later. You took it. That's fine. But you cannot take a trade here. Let's say there's a swing high here and the chosh happened like this. You cannot take it. I think you're old. This is the old ticker. This is the old ticker. But when you click execute, it will execute on the new ticker. It's stunning weird, bro. Stunning. I personally wouldn't trade this color. I like a trade. If it goes against me, I'm fine. Not risking too much on it. And we are beyond our sweeping strategy, right? So our sweep strategy, you guys know. I'm gonna go over it in a second. But like we have a sweep, chosh, FPG, we took the trade, we hit our TP. The algorithm, I mean the automation system took that trade, and I'll show you the executions of them if I can. I don't know if it go on QM. This trade here, I think large banana took this trade. He accidentally opened it as a trade. Right, large banana. You accidentally opened a trade on the wrong account. Yeah, that was one. All right, good. But we took this trade. It's TP. Then we took this. Then took this TP, and then went above the sprint session high. Then it went back down from the chosh with an FPG, and the algorithm, the automation took that trade as well and errored it. I think it was in my end. Oh, it was micro. Sorry, micro NQM. Yep, there you go. Is executions. Sweep, chosh, FPG. Took the entry right here. He went down. He went out just before the reversal. That was so beautiful. They went back up, swept again, came back down with a chosh, FPG, and took another trade right there, exactly right there. And went another for, I think how many ticks did I choose? I think it was 100. Went for 100 ticks right here. Yeah, it went for exactly 100 ticks. I can't do it properly, but you see. And it did this for NQ, it did it for CMC.
I didn't realize it could do it twice. Does that happen often where it does it twice in one session?
Good question there. I'm gonna answer you in a second, but let me just show you this while I'm at it. CL, we have sweep, chosh, FPG, we took it, and then we hit our TP right there. Beautiful. Out. And again, I did it also with YM, NQ, EL, ES. ES is another one. Again, I'm gonna show you in a second there. Just give me a second. So ES, let's trade with you guys. I think. Right. Beautiful. Just beautiful. Beautiful. Sweep, Josh, FAG, we take the entry right there. And we got that right there. I think it was about 7 points. I think. Now, back to your question. I was testing micros and minis at the same time. Not at the same time, but like after each other. So that's why I'm going back and forth. But you said that we took this sweep, Josh, FG, we took the trade, we got profit, we closed. The reason it took this trade is because the price went back up again above previous session high. So it swept again from another change in structure. FEG, and boom. Okay. But suppose you took this trade and it's going down and then it didn't sweep again. It just went up from another chosh. It wouldn't take that chosh. It has to form sweep chosh FEG. So long, we are not below Asia low. Once we're below Asia low, at this point, let's say we get a chosh again, bearish chosh, it wouldn't take it. It's gonna look only for longs. So it trades down until we got with bullish FEG. And this is Kiliana's question. Does it take the trade? Here's the same scenario. The chosh came in a new session, but it was formed in the previous session. It does not take this trade. You manually can trade it, but I don't want it to do that on an automatic basis, okay? Because this chart could have happened anywhere else, right? It has to be in the payment section. But if you were at a chart, or if you get an alert, you can still get an alert, I think, but it wouldn't take on automation. It has to be in the same section. All right, so now let's come back and check our trade. I don't know if we're in, we're in down. Yeah, we're about to get stuff down. It's fine. Do you see it? Am I stressed about the trade? No. Am I tweaking? Oh, damn, it was going good. No. Why am I doing this? Not because I'm a good trader. It's because I have made myself a plan. I have my target. I have my contract switching. So annoying. I have my target, which is right there. I have my target. I have my standard deviations. I chose my entry. My entry is beautiful. And everything is showing me that it wants to go up here. Okay. It may run straight to that. It may go right, like consider then go to it. It may stop me out and then go to it. It may not even go to it. Okay? But I have the favor odds in my favor. And if I want to take a trade, it has to be objective. And everything right now is objective. So if it goes against me, I'm fine. I would take that trade. I wouldn't say, oh, damn, it worked every single time. And now when I go live, it didn't work. Right? No, I wouldn't say that. But right now, there's something I'm scared of. This is starting to look like an immediate rebalance. No, it's not. Well, it can be. If this candle closes somewhere around this open, or this close of this candle, then we're gonna go down hard. But hopefully we don't. Now let's check your questions, guys. Does a second trade need to break recent high or previous session like that? Yeah, it does. I just said that. Why would we take the first trade? Because I thought we should not switch flow. There be human. Well done, brother. Good boy. Proud of you. Good question. I personally manually would not take it, but I do take it if it's automated. And now let me show you why. And that's a very good question. And I love this. I love our new automation for this specific reason. Now, if I go to Y and Y and M's, so many M's. And if I go back to our trade here, okay, pay attention close to here. This is taken automatically by our system. Okay. So we have a sweep. London. I never traded before this time. I never ever traded before this time. But I was smoking some shisha, the cafe at 6, 7 a.m., just watching what's gonna happen. But exactly what I expected happened. There's something still. So we have a sweep, Josh, FEG. It took the entry. Okay? And my stop loss is so small, about 8 ticks. 8 ticks. My stop loss is literally about 8 ticks. So about not even $60. And my TP was around 80 ticks. So it was around like this. My TP was exactly 80 ticks. If I'm not wrong. Yeah. We can check together. And I was watching and I was like, okay, this is probably going to get stopped out. And this is why I don't trade before 3 a.m. because there's more times than not, it may want to revisit the sweep and sweep again. It swept, it will come back and sweep again. Why? Because it won't be too much liquidity at this time of day. So it will generate liquidity, come back, take it out, and then run. Okay, that's why I said not before 3 a.m. Now, I was watching it, so it took the Josh, and I know that it's gonna sweep it again. Like more times than not, it's gonna re-sweep it, so it's gonna stop me out. In other words, but thanks to the automation system, I don't have to watch the chart. I don't have to watch the chart give me profit and then go against me and stop me out and be like, damn, now I have to wait for a new setup or like I'm gonna form it or nothing like that. I know that the algorithm, that the system, the automation system, our automating robot, whatever you want to call it, will give me another entry, and it's gonna be higher probability entry if we get that again. So here I got stopped out. So this is the trade, and it stopped me out here. Yeah, it stopped me out here for 5 contracts. So 3, 1, 1. I entered 5. Close that 5 here. And just about 10-15 minutes later, this 10-15 minutes later, after you're getting swapped out, it will be healthier. But since I'm not even checking the charts because I'm sleeping or whatever, the next choice we get will probably work out. And we took this trade, and boom. Beautiful. Beautiful. And look how much further they went down. God damn. Technically, if you're automating, you can have a bigger TP, right? Because if you're watching the chart, you're gonna be like, oh, I'm up 1K, I'm up 2K, oh my god, I'm up 2K, shall I close now? And then it reverses only a little bit like this, and you're like, damn, I'm gonna close. Then you see a run, and then you're like, oh, I'm gonna throw my back in. And you get stopped out again on this move back up, right? It happens to all of us. So with automation, I was asleep. Whatever it does, right? My stop loss is right here. Again, how big is my stop loss? From 60. 6 points. 6 points, bro. 6 points. So that was a beautiful how many R that was, but like you guys can do that math. So because of this, I don't trade before 3 a.m. Okay. Before 3 a.m., it might do this 2 or 3 or 4 times, but it's fine. The automation will do it for us over and over again. Hey Yura. So Derby, your question is, do not trade before 3 a.m. manually because there's a risk of getting stopped out multiple times because the market does 4 things, all right? The market does 4 things. 1, it hunts liquidity. 2, it rebalances imbalances like FEGs, etc. Or third thing, it rebalances to equilibrium. 4, it generates liquidity, and that is called market maker. All right, with the X being buy or sell. Okay? So the market will run to liquidity. Once it run liquidity, let's say it ran the liquidity here, right? It took the liquidity of Asia, previous session high, which is Asia. Now, what does it do? Now it can do 3 things. Most of the time, it's only these 2 things. Forget the 4th one, okay? Focus on the first 3 things. It will rebalance to any inefficiency that is not being efficiently balanced or back to equilibrium, okay? So it took the liquidity. It can do either of one of these 3 things. Okay, so since it did the liquidity here, it counted the liquidity. Now it can go to imbalances or equilibrium. Do we have any imbalances? We have this imbalances right here. We have, I don't know, the equilibrium of the range. So where's the range? Let's say this is the current range. This is the equilibrium. It ran to equilibrium. And then anything else? It went straight down, all the way down, taking out again the liquidity. So it went from liquidity to liquidity. Okay, but why did it do that? It doesn't usually do that. Why? Because it was generating liquidity, guys. What do I mean by liquidity? What do I mean by generating liquidity? Basically, look at this. Pay attention to this because this is how the market, every single move, every single retracement on a high time frame is a market making bundle on a lower time frame. Okay, so let me remove the executions. And let me remove this session right here as well. Look at this. This here, right, is the 4th part of what the market does. This is called market maker model. Okay, you have. Where were we? Why am I? There we go. All right. So here, look. Sorry about this, guys. It's ridiculous how slow this machine is. There we go. What do you guys see here? We see a consolidation, right? This here is engineered. It's engineered by the algorithm, and we give this name original consolidation. Okay, this is a market maker model. We start with an accumulation, then the market will move away from this accumulation. While it's moving away from it, it will come back. It will come back and revisit the low of this original consolidation right here. It will retest the original consolidation, and then it will run with 2 single steps. Okay, we call this step accumulation, reaccumulation. Stage 1, stage 2. First stage, we have an accumulation here. The market runs real quick. Okay. Second stage of accumulation is right here. We accumulate it back up to accumulate any more orders for anybody of the smart money or these deep pockets. If they still didn't enter the market yet, they have the opportunity to enter again here. Here is called a low risk buy, sorry, low risk sell. There's just no risk at all here, right? You have 0 drawdown. This is the first step, first stage. That's something you all want to learn, so this is the first stage, okay, of reaccumulation. Then the market goes down, gives a second stage of reaccumulation around here. And after the second stage is where the biggest moves happen. The market will go straight in a diamond line, so fast, so efficient, straight down, okay? Or straight up if we're in a buy model, right? And this is the last time you're allowed to be in a trade, okay? This is the last time. This is the only chance you have a chance to get a trade. So you have an FEG right here. You can go through, short it. You have, I don't know, an order block right here. You can go and be shorting anywhere inside this order block, okay? Or if you want to count this order block right here, we jump below it. Once this candle closes, this becomes an order block. Once we go back above it, once we go back to retest it, you can be buying short here. You have a volume imbalance, you have an order block, and you have a FEG. Beautiful, okay? And you can see the market runs straight down, okay? It's not a small move, guys. Taking out essentially these lows. So why did the market do this? You might be asking yourself, hey, look, why is the market doing this? Like, okay, did you just cherry pick? No, I'm not cherry picking. This is today, okay? Notice something important. While the market is delivering, what did it do? Why? What was I explaining these four things the market does? Right? The fourth thing the market does is generate liquidity. Right? So how did it generate liquidity, Luke? Well, let me remove everything for a second. You see these highs? This high, this swing high, let me zoom in. This swing high, 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 this swing high. These are generated low resistance liquidities, okay? The algorithm accumulated orders, then moved the market down, offering swing highs that it can later on in the day come back and target each of these highs. And you can see that every single high we take out, the market cracks through it without even resisting. It doesn't crack and then drops, cracks and then drops. It just continues, and it will eventually take all of these highs until, and the market maker model will finish, will be completed as soon as the high of the original consolidation is taken up, right? So all of these highs are your targets. You can be targeting, or you can be even entering, right? Normally, when you're longing, you probably take your position off at like a swing high, right? No, I can be buying at a swing high. That may be scary to you, but it's absolutely possible. Okay. So all these are potential targets for the algorithm to target later on. In which phase? In the buy model, buy side of the curve. So now, if you want to be fancy, you can go to your lines, I guess, or give me a second. Arc, no curve. So this is how it looks like. Okay. The left side, and now you're gonna be asking me, like, okay, this is so nice to understand, but how can I trade this? It's so hard to figure out if it's a market maker model or not. And I'm gonna give you a beautiful answer, and you do not have to know if it's a market maker model or not until it's very late. Like it has to happen, and then you can be given the opportunity to trade. Okay, you don't have to wait. You don't have to project whether it's a market maker or not. All right, guys. By the way, we just took a sweep short. So now it took a short right now. We'll check that out in a second, but you can see it's automatically. Let's have a look real quick. So it took a short, and it's targeting, I guess. Well, it's supposed to target. Put it 7 ticks, right? I put it to 7 points, but I want to target 5 points. I forgot to change it to 5. Okay. Now let's come back to this later on. Or you can just watch it. Where was I? All right. So, yeah, this is the sell side of the curve. And this is buy side. Why did you just disappear on me, bro? Shit just disappeared on me. All right. So, if you would probably never figure out this area, okay? That's why you can be taking trades in here, okay? So what do you wait for? You wait for a chosh. Once the market gives you a chosh with an FVG, breaking structure, now at this point, we are moving from sell side of the curve to buy side of the curve. At this point, you look, once you get a chosh, you look at the back, you look to the left side of the curve, okay? Imagine you don't have these. You just look. This is how I exactly do it every single night. You see, you zoom out. Oh, nice. I have a consolidated, a very clear consolidation area. Nice. Do I have swing highs that I can target? Yes, I have 1, 2, 3, 4, 5, 6, 7, 8, 9. Damn, this is starting to look like a market maker model. Beautiful. Can I take my longs now and target these highs? Well, not yet until you get the chosh, and you get the chosh change of character right there. Or if you want to be another fancy word, market structure shift or market shift or breaking structure, whatever you want to call it, they're all synonyms of the same exact word. You can be buying here. And this is called a low risk buy. You're buying right here. And I think we bought that as well. You'll be buying right here, and you can be essentially targeting every of these highs. This move here, I think it's going to continue going back up and take out this original consolidation. Okay. This here is just a retracement. Why? Because just like we did, whatever we did on the left side of the curve, you have to do it on the right side of the curve as well. What do I mean by that? So remember our first stage of accumulation, second stage and before the big move down? Same thing here. We have low risk buy, first stage of reaccumulation. And now we're probably forming the second stage of reaccumulation. Sorry, this was first stage of redistribution. This is reaccumulation, you're creating orders. And then it's going to give you the big moves. Okay. Probably that's why I anticipate. It may do it, it may not do it, but this is a high quality trade. Even though we are short right now, only yes. Look, it came so close to our stop loss, to our TP. Bro, it came to exactly to our TP. No, I didn't. Let's have a look. So if this is let's check if this is a good setup. Where's our chosh? Yeah, it's not that good of a chosh, but still. I would expect this area here. If we break below this level here, we would get a better chosh. But I'm fine with this chosh right there. Right? Now, how can you confirm if this is a market maker model or is it not? Well, this is our original consolidation. Remember our original consolidation? I was on YM, but on ES and NQ would probably get the same thing because they move in simultaneously in the same direction. If they, however, go other way around, then there will be a problem, and that's called SMTs. So how can you confirm this is actually an original consolidation for a market maker model? Well, you plot your standard deviation. We have this low manipulated this low with a swing high in between. Again, plot it from here to this high. If the two standard deviation lines up exactly with the original consolidation area, then this means that this is actually a market maker model. So right now, I don't want to really be short. I want to be long. So that's why I hope that I want to hit my TP and get out, because we're going against bias. Okay. So let's show NQ. Oh, YM just gave us setup too. So now we are in YM and ES. YM, you can see it. You stop your buy stop exactly at session high. You don't have to manually input it exactly at session high. Your TP, I think I set it to 35 ticks or 15. Yeah, I set it to 54 YM because I'm not too comfortable with YM. And beautiful. So now what is left? We have YM, we have NQ, we have ES. Only NQ is lacking behind. NQ has formed a what? NQ has formed a what you call it? An SMT, okay? Which is good. Which is good for us, I think. Any questions so far, guys? You're a unit trade? Are you long? Yeah, we were long as well. What happened to our long? I think we got stopped. I think we went along. Yeah, we went along. Got stopped out. I personally would be long this, but we left it to automation to take our trades. And our draw on liquidity for NQ is right here, 950. So right now, guys, we have two short positions against market maker models. Market maker models, and in our case, it's a buy model. It's the strongest model ICT tool. It's ICT's favorite, and he uses it himself, and it's amazing. Okay, so I don't want to be trading against that, but you have to imagine that you are not at the charts, so you cannot digest this. And that's the reason of automation, so you don't have to watch the chart 24/7. So you just have to leave it be, right? You may hit your TP, you may hit your stop loss, it doesn't matter. Okay. Overall, we're up on the day. Very good. Just by automating. We didn't touch the trade. We didn't touch the charts at all. It enters when we have a sweep of frame session high and then a bearish chosh. And more times than not, there will be an FUG if the chosh is valid, if the chart is good. Repa, can you explain your indicators about how you set up? All right, let's show how you set up the box. You guys are gonna be fascinated. It's so simple. Very simple. So this is our indicator, right? But if I turn everything off, it will show this, right? You can go ahead and show, you want to show only bullish. And of course you can change the colors. I hate these dimmed out colors. Right? Just like that. So you can see it shows bullish, you can show it, put it bearish or all. Okay, I leave at all. But it's up to you guys. And it shows the sessions by itself, included in it. And to set up the alerts, all you have to do, this here you can put your TP. All you have to do is click this, click add alert, click create. Done. You're done. Now you can just link it to your automating site and you're done. That's it. It will put stop loss, your TP, your entry, your alert, your transaction to thingy, all automatically, right? That's it. Simple as that. How long did it take me? It took me 3 seconds. Now, finally, NQ is dropping down. We formed a chosh on NQ as well. Hopefully, it holds. We have 47 seconds left. Hope we get chosh within 46 seconds. Let's check. Yes. We are up, guys. We are up $140 right now. So we're up 800 on the day. Let me open it simultaneously and see how we're doing. So it's gonna probably take a short on NQ as well. But I hope it goes well. I don't want to be embarrassed in front of you guys. All right, so ES hit LTP, ES hit LTP, I think. $200 up, not yet. 175, come on. Where's our entries, bro? It was ES entry form. My bad. It's YM. All right, there we go. Come on. And NQ just entered as well, guys. Now NQ is in the game with us. Shit. All right. This is over leveraged, to be honest. I would ask like only have one, maybe just one ticker, one position maximum, up to you. But since it's a 150k account, you can go ahead and try it. Hopefully NQ would load up. It's not loading, but come on. EPS, baby. So right now we're up almost. Anyway, it's not loading. It's so slow. It's ridiculous. NQ is still a bit down, and you can see that NQ also has the correct stop loss at the session high. TP is here. I think we're aiming for 100 ticks. I would personally aim for 50 because I'm so over leveraged right now. Yep. 50 ticks is more than enough. And you can play with it. You can move your stop loss TP anyway. It will just execute them for you. Right? So now, for us to hit our TP, I want us to close below the midpoint of this wick. If we close below the midpoint of this wick, we are Gucci. If not, we might reverse straight from here. Straight to Narnia. Where's the thing here? Oh, it's right there. Yeah. It's all the way up here. All right, see, it's right now, it's respecting the midpoint of this wick. This is not something I want to see. I want to see us break out of this right away. Otherwise, it can immediately form a rejection block here, use as this midpoint of this wick as support, and it can crack all the way back up. Okay, hopefully that's not what's gonna happen. But right now we're watching the chart, right? We're in the profit, we're dumping. Oh damn, what should I do? What should I do? That's why we use automation, because you don't have to watch your chart. You can close your chart. You don't have to go through all this hell of fluctuations up and down before you hit your TP or stop loss, right? You can just maybe, I don't know, check some hogs. See how much price the hogs are. But like, if you're a Muslim, you can click some pattern. Yeah, what I mean. Anyway, any questions so far, guys? Yes. Can you show buy or sell alert? What do you mean? It's right here. This is a sell alert. This is stop loss and TP. If you mean you can see here's your balance. So it's live. This is large bananas account, by the way. You can see your orders right here. You can close all. You can see a total. You can see here's your orders. Again, cancel all. We have open PNL of 50. We have 645 on a day. And if you want to see the orders, like the trades, you can come back here and you can see that here. NQ was taken. YM complete. Yes, complete. These ones, CLM, that's crude oil, was rejected, and so was rejected because the purpose of it is to cancel orders, but there wasn't any canceled orders. No SM orders open to cancel. It canceled automatically, which is even a bad idea. And you can see these are the trades we took today. So today we had 15 trades. That's insane. That's absolutely insane. Come on. So right now we're finally below the midpoint of this. We have 1 minute left. If we close below this, if we close below the midpoint of this wick, this low is in the crosshairs, okay? We will tap this low badly, but we're still respecting it. Yeah, I'm scared. We're up $255 right now. We're nearly almost 1K up on the day. Come on, NQ. Where's NQ? I can't even see it. Come on, we have 40 seconds left. Look, 40 seconds left. It can pump or it can dump. If we close below the midpoint, we're good. It's struggling right now. We're struggling as fuck. And NQ still hasn't opened, bro. Like, it's ridiculous. Come on, 15 seconds. 15 seconds. I think it's gonna crash out. Come on, look at it. Look at this. This is insane. Bro, this is insane. I swear I want to close the trade. This is insane. This is scary. Look at this. All right, finally we close below it. Now, nice. Now this low should be in the crosshairs. Okay. How much is it allowed to go up? It's allowed to go up till this area, midpoint of this wick. It's allowed to go up to here. No more. It's not allowed to close above here. You can probably go like add another position here, at this side. Oh my god, it's raining. It's raining in June, bro. All right, I don't want to watch this shot right now. Scary as hell. Yeah, it's all automatic. Did you see me take a trade? It's all automatic. I promise you, my hands are on my shisha right now. What's the TP for NQ? The TP for NQ is if it opens, I can check, but I can't check. There we go. We're about TP. We're about TP. Told you guys we're gonna hit this low. This low is the process. It's because below this midpoint. You can partial or close your trades here. I'm gonna just leave it like this. I don't know why. But let's see. Let's hopefully come on. CL didn't give us an opportunity, but let's change CL to NQM. Right now, guys, we are up 445 bucks. We're up almost 500 bucks. We're up 1.1K on the day, doing literally, we're up 500 bucks exactly. We're doing nothing, guys. We're doing absolutely nothing. 1.2K. One of the trades closed. What trade? Oh, ES closed. Congratulations, guys. ES trade has been success. Now we have YM left and we have NQ. NQ is about to hit TP. NQ is about to hit TP. 632 is the TP, by the way. Come on, baby. Come on, baby. Give me one more flush down. This one, stupid, still hasn't closed. YM could potentially continue going down. Come on, temp. Yes, let's go. NQ took the TP as well. You can see it closed automatically. We left with YM. We're up 1.3K on the day.